just right now. Okay, we start recording. Welcome for the harmonic pattern and harmonic trading webinar. So first of all, friends, please, once again, as on every webinar, I will stop after each topic I have elaborate on, and I will give you the time for questions. Okay, I will give you the time for questions. Sorry for that. And please don't confuse me with the chat during the fluence of the webinar. Okay, so I can go on all the topics I wanted. So first of all, friends, what is harmonic pattern trading? There are some patterns recognized by many different traders. Okay, all of them based on Fibonacci level. Here we have on our room a very big Fibonacci master and very big Fibonacci, well, actually the supermaster, I would say, Gerard. You will meet him with his specific Fibonacci levels, okay, on the future. Hey Gerard, say hello. And but no one can see it, only me. So don't say, don't say. And all these harmonic patterns actually based on Fibonacci levels. Right? As you know, the Fibonacci is some really important and serious tool, okay, that actually can help us to get the better view of the market. I personally do not use Fibonacci. I used to, when I was only intraday trader, I used to trade with Fibonacci's, plus MACD divergence, of course, but also Fibonacci's levels. I do believe, I'm a big believer in Fibonacci's. I just don't do it because I kind of reached the level that I understand that all the Fibonacci levels combined together with other important tools. Okay, if there is a Fibonacci, there is a resistance or trend line or divergence around this level. No, and there is a big logic because of that. Because usually divergences or trend lines or everything else will meet the important areas. What are the Fibonacci's? Are exact numbers of price actions, right? Corrections or a move or everything we want, right? And what is the price action? That's our human psychology. Why do we stop buying or selling on specific level, which also will meet the Fibonacci level? Because something fundamentally or psychologically tell us to stop being there and stop trading that. Okay. That's how the simple psychological work. That's about harmonic. Okay, so and now there are many patterns. Okay, many patterns that could be traded. Just you to understand, watch all the patterns I have. Okay, ABCD, 1 ABCD, 1 plus T ABCD, Gartley, butterfly, crab, bat, Batman, head and shoulders, I plus head and shoulders, 3 drives, 5-0, running core, emerging Gartley, emerging butterfly, emerging crab, emerging bat. Okay, there are more. There is also AB equal CD. Okay, if we go a little lower, for example, that's how it looks like. See, that's the bearish 1 to 3 drives. That's the same I'm talking about on the divergences. Remember, 1, 2, 3, 4, 5, which is 3 topics, 3 tops, and the clear line between them, and the divergence, and then bam, all the way down. Right? We have the 5-0, which is a very good one, but I do not trade it because it always appears with hidden divergence. But that's how it looks like. 1, 2, 3, then big correction 4, 5, which is half of this line, and then bam, all the way down. Okay. Also, oops, sorry. it is, okay? A bearish bat and a butterfly, and there is also a crab, which is my favorite, and bearish or bullish Gartley, which I personally don't like so much unless it combined with important other things. Okay, this is just the whole view. Okay, there are also A, B, C, D. Right? There are head and shoulders, which we all know. Right? By the way, if you want this book, I want to upload it. Okay, to the area. There is a book based on core harmonics indicator. I use the ZUP. I use the ZUP version 83. I love this this indicator, this template, but you also can go for core harmonic and download it. It's also free from Trading Arsenal. It's also free, but they update the indicator once a while. I prefer the one you saw before because you see the picture, there are different. It looks not so good from my point of view. I prefer this one. It looks much better. Well, but from my point of view. But you can choose. Okay, just Google it and you will see it. Core harmonic. So I want to discuss first of all about the reliability of the patterns. Okay, and also about when it's good to enter, what's actually how we should work with that, and well, we will finish with that. So first of all, the less reliable pattern is Gartley. I use for the signals, I use Gartley, bat, butterfly, and crab. Crab is the more rare pattern. It appears not a lot, just once off a long time, but when it comes, it's very, 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 very powerful, just because the risk-reward ratio. Okay, we will discuss about it. Okay, there is a Gartley. Gartley must be combined with other proofs. What do I mean? Gartley must meet other confirmation from charts, resistances, supports, trend lines, okay, or psychological level. What are psychological level? Figure numbers, for example, 140, 145, 150. Okay, figure numbers, important numbers. Okay, resistances and trend lines, you know. Okay, let's take the last example of R. It was the euro dollar call. It was a bearish Gartley. Okay, now when you this indicator you have on your chart, this one I don't use. It's a kind of meter of currency power. I don't use it. I don't like it. I don't believe on it. It says the exact thing on the market. Right? If the Japanese yen is well, the strongest, for example, we will see it. Okay, if it's weakest, we will see it. Okay, so I don't believe on it. I really don't believe on it. I don't use it. Okay, so can be deleted. This indicator is very good, and I will explain about it a little later. So once we have a signal, we will have a window. You see, a red window with barriers. See, with borders. We will get two lines at least. We will get two lines at least. While one will be well, light blue, and one will be yellow. Okay. Plus, we will also have channel. Okay. The channel is based on Fibonacci levels, also, and the prices usually will retrace from one of the channels. Now, harmonic pattern is based on statistics only. That's the only thing that you must understand and remember always. The stop loss always is lower than possible profit. The stop loss is always lower than possible profit. So we can have row in a row, right? Many losses, right? We can lose 5, 6, 7, 10 trades in a row, but we also can have 5, 6, 7, 10, even more winning in a row, winners. Okay. The only thing that's important here that every risk we take is much lower than the possible profit. Why? Because this based on statistics. If I tend to enter, I will explain more about it, but just a quick beginning. I tend to enter somewhere in between these two lines, which is the light blue and the yellow. Okay? I tend to enter in the window, in this window, but I also accept to enter after this window when the prices are actually run over, right? If they are still close to the yellow or red lines, which is on the channel, and the lower indicator, okay, I will explain later about this indicator, but the low indicator also on its extreme area, right? On its extreme area. When it happened, okay, I still okay with getting out of the window and take the trade. Okay, so once I look to take the trade in between these lines, somewhere in between these lines. Okay, for each pattern, by the way, the window will be different, and the lines will be on a different place. Somewhere it will be up, somewhere it will be lower, little lower. Okay, but the price we should enter on those lines. The stop loss should be out of the window. Out of the window. Depends on how big your chart. If it's 4-hour chart, then 10, 15 pips. If it's 1-hour chart, then 5 pips. Okay, it's a daily chart, little more. Okay, little more. That's about the entry. Now, I will never enter for a trade where the risk-reward ratio is bad. What do I mean? Is where the stop loss is equal the first profit, or stop loss even bigger than first profit. And where is the first profit? The first profit is on the meeting point, on the middle point of the pattern. You see? That's the first profit. That's the first profit. Questions. If you have any questions, as for now, only about things that I have already explained, not the things I still did not explain, please ask now. I will explain it again, the stop and profit, okay? And I will also explain the next profits. Okay? Marty asks about red lines. The lines I've deleted, or this border? Oh, it was just those lines that I put. Horizontal lines I just put. So don't worry about them. You will not see them. Okay. Adrian, my friend, I will explain about the second target. Joanna asks, please repeat the pips above the box for stop loss. Okay, that's good. On 4-hour chart, it's about 15 pips. On 1-hour chart, well, 5 pips plus spread. Okay, plus spread. 5 pips plus spread. Above or below. This is a bearish, so above. If it's a bullish call, then below. Okay, you understand it. Okay. Daily chart, more. As bigger the time frame, the bigger the stop above. Okay. Right. Dave says, does your alert service explain which time frame to look? Always. On the when you have the alert, you always have time frame. Philip asks, did you say entry between blue and yellow line? Yes. Yes. Okay. I will show many examples. Okay, in a few minutes, many examples. So you will see many good examples for many patterns. Okay. Okay. Adrian asks, what are these lines for? The dotted lines. This is the channels based on Fibonacci levels. And when the price meets, the price that I want to enter meets one of those lines, the reliability of the trade becomes much higher. The possibility this trade will work is much higher. Okay? So it's very good to have those lines. Gerard, sorry, not before we have Angus. Is there a minimum time frame you would use this? Yes, I use minimum 1 hour chart, minimum, but mostly 4 hours and daily. Mostly 4 hours and daily. Most of your signals will come on 4 hours and daily. Just for one reason, so you have enough time to enter the trade. 95% of the trades you will get will be based on pending orders. Only sometimes once of, I don't know, 20, 30, 40 pips, I don't know, you will get the market price. Okay, so that's the reason I prefer the longer time frames. You can use with 5 minutes and 15 minutes, it works, but it's not good for signals because you will not have time to get in. It's all based on pendings. Jared asked, what is the two yellow lines? And well, I have explained it already. It's a channel based on Fibonacci levels. And once the pattern meets the entry price on one of those lines, the reliability of the trade is much higher. Okay. David asks, just to confirm, the red box is the area in which we should look for trade setup. Correct. Correct. But once again, I do accept entry also out of the range, as long as I still sit on one of the lines, of the dotted lines, and this indicator, which I will explain a little later, is on overbought or oversold area. Okay. First target is the middle point of the pattern, which is the meeting of these two triangles. Yes. All right. I like the question, Goran. WHWRW to find alerter. You can Google it, or you can just take it free from the members area. On the download section, you can have this indicator. It's free there, waiting for you. Dave asks, so do you set pending orders? Yes, 95% that you will get for harmonics will be based on pendings. Yes. Peter asks, what are the other lines on stochastic? I will explain little later. Would you look for a bearish or bullish candle to enter? Asks Dave. No, that's the beauty of this strategy. You don't look for candles, you look for price, exact price. Okay. Tim asks, I'm looking at a bullish butterfly on Swiss yen and the yellow channels are not even close to the red box. Okay, let's see. It's a good question. Are you talking about this one? Tim? This is the one? Oh, on hourly. Okay, you don't take this trade. It's a bullish butterfly that you don't take this trade. It's not reliable. You see, it's a good question here. You see? The lines are here. The pattern is here. This indicator even not close to the extreme area. Skip it. It could work, of course, but skip it. It's not reliable enough. No. Okay. It's a good example, Tim. Thank you for that. Skip it. All right. By the way, we have this Swiss yen for long run. Remember, this is the line from my point of view. This is the extreme area here. It could take more weeks on these lines, right? It is on the extreme area here. It could play up and down, up and down, up and down, but then, bam, retrace all the way. All right? It looks very good. Yet. Angus says, are your pending orders from the dotted lines? Most of them, not all of them. Okay, there is also this indicator, which I will explain later. Okay, so most of them, yes, will be close to the line. It can be always on the line, but it will be always close to the line, yes. And the stop once again above, out of the box. Okay. Kola asks, why is not reliable? It's not reliable because I look for the trades close to one of the dotted lines, okay, which the box should be in those lines, okay, and also this indicator, but which I'll explain later. Adrian asks, is it for this weekly chart? We will wait until it touches. Once again, Adrian, it will not touch always the exact line. It should be around this area, and it is around already. As you can see, it is around already. That's the range, right? That's the range. It is around the range already. Okay. It's a weekly chart, so once again, it's not 10-20 pips. It's 200 pips range. Okay, so we should understand it. The bigger the chart, the bigger the time, the bigger the range. Okay. Tim asks to clarify, we don't enter a trade until after it leaves the red box. Once again, we can enter after it leaves the box as long as we are still close to the dotted line and the lower indicator, which I will explain soon, is on extreme area. Okay. Joanna asks, could you please make use of the arrow pointer? I don't know how to do it. I don't have arrows. Okay, sorry. Yes, this webinar is recorded. Let me see. Yes, it is recorded. Okay, so no worries. And Phillips, do you use pivot levels? No. You can. I know many traders that do. I don't. Okay, friends, let's move forward. We still have more things to go through. Okay, that was about the Gartley. The Gartley is less reliable pattern. It is the deepest pattern. Okay, it is the deepest pattern. Okay, and we take trades. Remember, friends, we take trades. Oh, this is this one, Joanna. It's better this way. Okay, cool. I will use this one. All right. We enter a trade only if our first profit is much bigger than the stop loss. The stop is out of the box, the first profit in the middle of the pattern. The second profit is from, you take the range from the middle to the end of the pattern, right? From the middle to the end, right? You look for a very important support in between this range. Okay, for example, that's an important support here, right? This range, that's the second target, and the third target you take Let me get back for the euro. You go for the lower lows. In this case, you have the line. Okay, you have the line in between. You see? Take the line in between them. Okay, and this is your last target. Target number 3. Once again, second target somewhere in between the middle, close to very important support. Okay, and the last target is you take these last lines and grab and draw the line, and that's the last target. Okay, that's about that. By the way, about the stop loss and profits, it's the same for each pattern. Okay, stop out of the box, first profit middle, second in the middle of the high, right, and around the good support or resistance, and the last on the very edge. Okay, now let's go for next pattern. Okay, let's go for next pattern. For example, the New Zealandian yen. Okay, New Zealandian yen. The entry was here, in between those lines. Right? It reached just right here, on the dotted line. On the dotted line, you see? Here, it entered just right here, with extreme of this indicator. So it's a good entry, right? It is a correct entry. The stop has to be out of the box. The profit is the middle. Once again, we enter here, stop loss out of the box. First profit should be bigger than the stop loss. Second target in the middle on the support. Last target is here. Right? You take the line, and that's the last target. Okay? For example, about the New Zealandian yen. Alright? Can we enter it now? Well, now it's even better, but we're already in. If you are out, technically you can't enter because it is out of the dotted lines. Technically you can't enter. It is out of the lines, but because we are already in, it could still be very good with very small risk and much higher possible profit. Once again, technically it's wrong, but in case we are already in, it is okay. Alright? Friends, please let me continue. Okay, and I will stop for more questions later. Promise. Okay. Let's continue. The other, the next two reliable patterns are butterfly, bullish or bearish, and bullish or bearish, and bet. Okay, and bet. Let me just have this. Okay, and let's go for. By the way, I have all the signals that I give you. I have a specific, you see, harmonical signal screenshot. So if you want, no, the crab is the last one too. I will explain it later. I'm talking now about bat and butterfly, which looks alike. Okay, let's have a look on the patterns. Okay, that's the trades that you have on your signals area. Okay, this is how it looks like. You will get exact, okay, entry, stop, profits. Okay, this is bearish Gartley for Euro Australian, which worked but never. Remember this trade? This was the trade. Just want to show you here, Euro Australian. Okay, never reached the line but worked. why didn't we enter here? Because in this point the stop loss was around 100 pips and the first profit was 80 pips. That's not good. It worked, it retraced, but it is not good, and we don't want to take this kind of trend. Okay, remember that. Okay, that's the euro franc, which failed, right? It was very good entry on the dotted lines, right? On this 2 lines area, very good. Only this indicator was little suspicious, but still good enough. But this trade failed, right? Also, euro British pound reached the entry. Okay, this is the bet, one of the most reliable patterns. Reached, begins to go on this range, went down but then up again, and on the very news day it failed the trade. Okay, but once again, as I said, it's very statistical strategy. We can lose 1, 2, 3, 4, 5, 6 in a row, but we can profit 1, 2, 3, 4, 6, 5 in a row. The only thing we must remember is to make sure that the forced profit is much bigger than the stop loss. This way we will guarantee our profits long run. Okay, that's the euro Gartley, and this is a bullish bet, the one I wanted to explain. It happened on the very beginning of this of our club, of our service. Just few days before, we discussed about it, well, on the previous live room where I used to be, on my previous service, the Forex Signals. We discussed about this trade, and I just want to show you how all it was. It was just right here, 16 June. It was just right here. Here it was. That was the pattern here. It was inverted, right? That was the pattern, and then bam, all the way up. Okay, you see? If I go back, this is how it looked like. You see? This was the pattern. Once again, this, and this. Okay, that's what made this bet. Okay, bullish bet, and then bam, retraced all the way. Once again, why these patterns are very better? Okay, because the stop loss is small, the profit is big, much bigger than the stop. Okay, much bigger than the stop, and that's what we are looking for. That's the minus of Gartley, but that's what we are looking for. We are looking for risk small amount of pips, taking big amount of pips. Okay, first, it's good psychologically. Second, it is statistically correct for this kind of trading. Okay, it is statistically. We can lose 40 pips, 70 pips, and then bam, take 200 pips. That's how it works. Okay, and you can see here, by the way, the stop is 80, the profit is 200. Okay, 200. Cool. Let's move forward. Okay. Also, British pound, New Zealandian, bullish butterfly. Okay, bullish butterfly. See? All right. I just want to show you a crab. By the way, we have live dollar franc. You see? We have it live. Yet, remember? I hope you saw it, right? We are on the dotted line, on the second blue line. Okay, it should retrace powerfully from here. Powerfully. Also, we have very extreme indicator here. It should retrace powerfully long run. Okay, I just want to show you the crab. Here it is, Australian dollar 1 hour crab. You see how small this range, how extreme this area, okay, how extreme this area. 20 pips stop loss, 50 pips first one, okay. The only reason, by the way, for the crab, and I will explain that, and the other is here, and the third is here. I will explain. It's specific for crab, okay? It's specific for crab. I just wanted to show you how it worked, and you can see it here. Aussie dollar 1 hour chart. It was here. That was the crab. That was the crab, and then bam, all the way down, right? All the way down. No, it was 50 pips, not 500, 50 pips. Okay. Now about the crab, very important thing. When we have a crab, right? When we have a crab, two things you should remember. The stop loss will be very small. You can set the first target on the middle, but usually it will not reach that as the first target. So the first target should be placed on critical support from the end, the first critical support from the entry. In this case, that was the support here, 106.60. Alright? That's the range that was broken only with this candle. Right? That's the range. Okay? And you should remember that. I have a classical example on the S&P 500. If I show you this, on the monthly chart, on the weekly chart, we have a bearish crab. You see? A bearish crab here. Fantastic entry. Everything looks just amazing. Right? Just amazing. But we have a critical support, which is this range, right? Just a second. Here, this range. Two highs that was stopped, right? Two highs. It's a weekly chart. That's why it's good enough. Then break and stop on again on the line. Okay? Stop and again on the line. That's the first target. The second target could be here. Okay? Second target could be here. Alright? Very important to remember. The second thing very important to remember, friends, for the crab, that it will never be on the dotted lines. That's the only pattern that those dotted lines are not relevant. Okay? First thing you must remember, that you should respect first critical support or resistance as first target. Okay? And also remember that those lines are not relevant for the crab pattern. Now time for questions, friends. Let's see. Kushal asks, there is a pattern on dollar yen 4 hour charts. Let's see. And you tell me, friends, if it's good enough or not. By the way, it's a pattern I'm looking to signal about. But is it good enough or not? What do you think, friends? Nigel says no. James says no. Theo says no. I also say no. Why not? Because even if we take an entry here, the stop loss would be around 40 pips, maybe a little bigger, and the first target will be the same, even little more. That's why this trade is not good. Okay? Very good, friends. Very good. Is that okay, Kushal? Right? Next questions. Dave asks. Oh, okay, Dave. I've answered this question about the dotted lines on the crab pattern. Okay. Okay. Teams asks, are the harmonic pattern better when one wick is bigger or smaller than the other? It will always happen on Gartley and butterfly. Okay, on bet not always, but it's not relevant, Tim. There is no importance for the difference of the wings. Of the bottom left corner of the chart. This one? It just means, Kola, that as for now there is no pattern. But why does it say WTI July? No idea. No idea. I don't know what does it mean. To be honest, I just you said it now. I just pay attention to that. I never saw what it means. No idea. Andrew asks, do you move stop loss to break even after force target reached? I usually move I usually move stop loss to break even after the second target, but I also move stop loss to break even if the trend becomes, if the trade becomes choppy and in a range of sideways moves. I think we had the New Zealandian example for, yeah, the New Zealandian example for that. Okay, it was just, it became a range, right? It became a range. Up, down, up, down, up, down, up, down. When you see this range, then I usually move stop loss to break even. Yes. Okay. Because, well, once again, remember that I said that we will not trade harmonics on August and December. Okay, I said it on the live trading room. Why? Because this strategy all based on volatility, on moves. Okay, during summer hardly see moves, hardly have moves. Okay, no moves. This is how it will gonna look like. In this case, I don't want to be in. Okay, I just don't want to be in. Right? That's what happened, by the way, with the New Zealandian, for example. Okay. Joanna asks, in the New Zealandian we saw two blue lines. Yes, sometimes there are two lines. It happens when we have a deep red pattern. You see the red box? It happens when we have a deep box. Well, there are some money management things. Usually in such situation, I don't do it, but the rules says take first position here and second if it reached the second range. Take another extra position. I don't do it, I just enter the first as long the stop loss is lower than the first profit. I don't believe on taking another position on these levels. That's what it means. Sometimes it's even 3 range. Sometimes it's even 3 if it's big. If it's really big, but it usually says add another position. I don't believe in it. Okay. Sunny asks, how do you distinguish bet and crab or butterfly? It just says. You see here? It says the pattern. The pattern name. Okay. Okay. Yes, the stochastic is the next one I've explained, Dave. When you have Phil, that's what I just answered Johanna. Okay. Joanna asks, is the euro dollar, the yellow lines was too far? The entry was on the line. See? On the dotted line and the range of these two lines. This was the entry with a spike. Bam, and down. Okay, that's why it was very good trade. Thank you for that, James. Yes, actually, some time ago, this indicator was sold on $2,000. It's ridiculous. Well, from my point of view, it's really just ridiculous. You can get it free on the net with explanations and everything. So, thank you for that, James. Well, I prefer to teach the things I use for well, not free because you still pay for this service, but I don't believe in these sums. It's crazy, not logical to pay $2,000 for indicator. Maybe a course. Well, I believe to pay good money for courses. I paid a lot of money also as well. I paid more than 10K for Elders seminar, Alexander Elders. But to pay 2,000 for indicator and strategy, it's crazy. Okay, many questions about the stochastic. Okay, let me just see if there's something that I still can. Yeah, of course. Well, Momo asks, do I scan all the charts to see? Well, actually, I put it another MetaTrader, 1 hour, 4 hours, and daily charts on everything, every pair and commodity and index. Okay, just to have the alert when it happens. Okay, so yeah, I have it. Okay. Yeah. Okay, now friends, well, first of all, once again, those are the for just few words, okay, to summarize what we talked till now. These are the 4 patterns we will use. Okay, Gartley, which is less reliable unless it sits on resistances or trend lines, which happens with the euro dollar. Remember, this is critical resistance and also daily trend line. Remember, that's the daily trend line here. See, right? So it's a very good trade. It was very good trade, right? That's why we that's why we can take it, and we took it. Okay, and we still have the third target running. Okay, and that's about the Gartley. Bat and butterfly considered as must reliable. Okay, bat and butterfly considered as must reliable mainly because the stop loss and take profit risk reward ratio, right? And the crab which is the most reliable but appears once a while. Okay, now you also know how to use the blue and the yellow lines and the dotted lines. Now let's discuss about the stochastic. What does it mean? And as I promised, I will show you the secret 3 and secret 4 slopes of this indicator, which my good friend Max trade. I never, to be honest, I never paid attention to that, but once he taught me that, I always look for this indicator, to be honest, even when it comes to divergences, because it works. And he showed me his statistics, just unbelievable. So let's discuss what this indicator is. It is stochastic, okay, 28, 3 and 5, when the regular usually is 5, 3, 3. This is 28, 3 and 5 to take it to avoid the noises, okay. And it's also Bollinger Bands 8, not 20 but 8, okay, combined. All right, now I have a signal here. Let me see. No, it's not good signal. Moving average is not that. By the way, this is, as you see it, it will be Vlad surprise for you on August, at the end of August. So I promise surprises, right? So I will surprise you. So this is an indicator based on stochastic and Bollinger. What do we look for? First of all, there is 80 and 20, right, which are also critical areas for regular stochastic, right? For each regular stochastic, and also the Bollinger Bands boundaries. Pay attention what happens when they are really tight. Okay? Pay attention when they are really tight. When they begins to be tight, even if there is no harmonic pattern, the market will look for a retrace. And as longer as this pattern will go, as this indicator will go, I mean, if it continues to be very tight and continue to go more and more above the critical area, the retrace will be powerful and stronger. Okay, for example, see what happened here. Okay, it goes very tight and then bam, all the way down. Here the same, up move, small up move with small moves, right? Then, well, it's not so tight, but still good correction. Okay, sometimes I just want to show you something clear. Okay, pay attention what happened here. Okay, pay attention what happened here. Can you call it tight? Can you call it tight? No way, right? It's not tight. It's not tight. You know what I mean? Only here it was tight, but all this situation, all those rides are not tight, and we are looking for long tight situation. For example, Swiss yen or dollar franc. Okay, the weekly chart, for example. Okay, it begins to get tight only now. You see, that means that we still can, not for sure, but we still can have a ride, a tight area, but then bam, critical retrace. The same on the dollar franc. Okay, you see, the Bollinger Bands begin tighter and tighter just right now. We still can have a ride, and then bam, a retrace. Okay, so how to use this indicator? Look for a very tight situations. When you have very tight situations, even if there is no harmonic pattern, you can get ready for a powerful retrace of the market. Okay. By the way, dollar franc 4-hour chart, you see this crab entered in, went up, but if you pay attention, it never reached the deepest area. It reached the forced resistance, as we talked, right? But never more yet. Okay, just for example. Okay, and I get back for the tight area. I just want to show you very tight situations. Okay, we have had this ride, and look how tight it is. From this area, friends, from this area, the market will begin to correct. Most of the times it will not just correct, but turn the market. Okay, but sometimes it will just make corrections. And if you are in, you should remember that if you are riding the down move and you see tight situations, that's when you have to understand that there is a very good possibility the market will change the direction, or at least make a correction, and this is very good area to close 80% of the trade. Okay, remember that. Okay. See, after each tight, you can just go back on the past and see how it worked after the tight situations. Okay, after the tight situations. You see? Okay. Usually it turns the direction, but sometimes it just brings corrections. Okay, just brings correction. Okay, you can go for the past and see. When it's not tight, when it is not tight, nothing happened. Okay, but when it's tight, good retraces appears. Okay, and now for a very interesting thing. Okay, the way that my friend trades. Okay, the only way he trades, to be completely honest. 3 or 4 slopes secrets. This is a stochastic indicator, as said. Okay, he looks for, let's see it better, he looks for situations when the indicator enters extreme area 20 or 80, okay, and make 3 or 4 important change of slopes. For example, 1, 2, 3, right? I mean the same direction, on the same direction. You see, 1 up, then down, then 2 up again, blocked on the 20, down, and bam, 3 up again. See? Okay. Why do I say 3 or 4? I will explain in a minute. When he has number 3, even without harmonics, he looks for the first bullish candle and enter the position. The stop loss is just few pips below last low or last high, which is very, very, very tight. The first target is twice bigger than the stop loss. So for example, if stop loss is 50, then first profit is 100, and second target is 3 times bigger than the stop loss. 3 times bigger than the stop loss. By the way, he also works with 80-20 principle of money management, as I do. Why did I say numbers 3 or 4 change of the slopes? Because if he is in the trade, he is already in the trade, and then number 4 appeared, he does not add a position. But if he was kicked out with a stop loss, then he will take the fourth change of the slope with the next candle pattern. You understand what I mean? If this was failed, okay, he was looking for another down move, fourth change of the slope on the same direction, okay, 1 up, 2 up, 3, and then 4, okay, to take another trade. If he is already in a trade, he does not take this trade. Very important. Once again, stop below or above low or high. First profit twice bigger than stop loss. Second target 3 times bigger than stop loss. Also 80-20 principle of money management, as I do. Okay. Also very important. Plus another thing, if you have this kind of situations, 1, 2, 3, but the indicator was riding the 80 up and down, he does not take this trade. Okay, he does not take this trade. In this case it worked, but if you go back, it will not work. Not here and not here. Okay, it just want to see it on the range above 80 or below 20. If it's riding this area, it's not good. It's not good. just want to be it in. Okay, this is not good. Okay, we want it to be in. Okay, in 1, 2, 3. Okay, that's what he wants to take. Okay, very tight stop loss. First profit twice bigger than stop loss. Second profit is 3 times. Okay, once again, all in 1, 2, 3. Okay, here he starts to take the trade. Okay, just right here, see? Okay, very tight stop. First profit twice bigger, second target 3 times bigger. Okay, now the statistics is 65, I think, percent. I'm not sure, or 60 or 65% success for reaching the first target. For reaching the first target. Second target is little lower. Okay. Very good strategy, very good statements. Only 4-hour chart, all pairs. Only 4-hour chart, all pairs. Only 4-hour charts, all pairs. Once again, just to repeat, the 3 slopes, change 3 or 4, should all happen above the 80 or below the 20. Okay, that's all. Now your time for questions, friends. Well, I admit I do not trade it, but I pay attention for that with my divergences. And if it's combined, then attack. Then attack. Philip asks, oh, good morning, Sam. Good to see you here. Philip asks, with the stochastic strategy, do you place the stop just above or below the entry candle? No, just above or below the last high or low, which is, by the way, will always be very close to each other. Always. Always very close to each other. Nigel asks, this indicator can be downloaded. This indicator is included in the harmonic indicator you have in the download area. Just go here and choose on the template, choose the LT harmonics. That's all. Okay, choose the LT harmonics. Loisa says, please repeat 4-hour. Yes, 4-hour chart only, all pairs. Okay, all pairs. Any more questions, friends, about this one? Very good strategy. And please, please, please do not believe me or him. Okay, don't believe me or him. Just go back, because it's very easy to go back and test it. Okay, just go back and test it. See how simple it is. Very stupid. Keep it stupid and simple. You know the rule? It's very clear, very stupid rules. 1, 2, 3 slopes. Okay, attack. Nothing to understand the trend lines or divergences. You know what I mean? Nothing based on theories. Okay, just clear. 1, 2, 3 slopes. Enter. If you lost the third and the fourth are still above, attack the fourth. Okay, very, very good. Stanko asks, the slopes a kind of divergence, right? No, just the cross of stochastic of the Bollinger. Well, on some logics, yes, it's kind of divergence because it happens usually after extra move on the same direction. Well, yeah, you can call it this way, Stanko. Yeah, it's kind of some kind of divergence. Yeah. Rainer says, can you please tell the exact rules once again? Yes. Look for extreme area above 80 or below 20, 3 slopes on the same direction. 1 down, 2 down, 3 down. Okay? When you have the third, you attack with the fourth candle. This case, bearish. If it's on the 20 area, then bullish. Okay? Stop few pips above last high or below last low. Forced profit twice bigger than the stop loss, 80% close. Second target, 20% close, which is 3 times bigger than the stop loss. Dave's, do you prefer this over? No, I don't prefer this over divergences. I sometimes look as for this as a extra confirmation. Yes, yes, I do look on it. I do not trade it, but I do look on it. I do look on it. Johan says, there was some delay between your voice and slap chance. Yes, the green line, Johan. Yes, the green line. I want to be slopped above 80 or below 20. Momo says slop. No, slop does not mean the cross. Slop means the slop. Slop means slop. This is slop. This is slop. Okay. And not specifically cross up and down. Okay. You're welcome, Rainer. And Sam asks whether bullish or bearish candle should close. Yes. For if it's below 20, then only bullish. Yeah. If it's above 80, then only bearish. Yes. That's the rules. Friends, it will be. This is recorded. Okay, so you can just go through it again and again. Okay. And once again, please don't believe me. Please, I always ask this. Okay. Just go back and see how it works. It's very easy to go back. Plus, also you have the simulator, right? You have simulator. You can test it. You can test it, friends. You can test it with simulator. It's very, very, very beautiful. Okay, very beautiful. Of course, it helps if there is a resistances or supports, but he does not use it. Why should we? Okay. Johanna says, should the candle be closed? Yeah, yes. The candle must be closed before enter. Otherwise, how can you know if it's a bearish or bullish? Sam asked a good question. What if the candle is too long? In such case, skip the trade. Well, if the one candle is, I don't know, 150 pips or 200 pips move, well, logically, the stop loss is too big, right? So the profit will be also bigger to reach. Yeah, it's a good one, Sam. Thank you for that. Yes, if it's too big, don't trade it. Don't trade it. It should be logical. It's a 4-hour chart, so it should be 70, 80 pips stop loss, 100 pips, but not 200 or 190. Okay? Okay, friends, I really hope that you find this webinar a little help. Once again, please remember, harmonic is very statistics. Some months can be lost. Okay, I explained you on March this year, it was minus. We lost. Okay, but on May and June were very, very amazing months. So it's all about statistics. Sometimes, yes, it will be losses in a row, and you must accept it because it's statistical trading. That's how it works. Okay, that's how it works. All right, friends, thank you very much for being here on Friday. Please avoid trading the non-farm payrolls. It's crazy. Let's see how the market ends. We have, by the way, we have the euro dollar, right? The last third target running, and also New Zealandian yen, which is right now in a minus as for now. Okay, so let's see how these two harmonics will end. We have dollar, franc, and Swiss yen long-term harmonic patterns running as well. So, right, friends, thank you very much for this week, and let's hope for more volatile week, on more trend week for the next one. Thank you very much for being here. The schedule for the next week, live trading room and webinars, will be sent during the weekend on Sunday. Thank you very much and enjoy your beautiful weekend. Sorry. Thank you. Goodbye.